Hey, it's Eric with the Future Mill. I've had a lot of questions about, is the stock market on the rebound? People are wondering that. They're wondering, should I put more into my 401k? Should I not? Should I take the cash that I set aside and jump into the market? Should I continue to wait? Tons of questions going around about this. And what I want to talk about is if I think that the market is on a rebound or not, but I also want to address what you should be doing about it. Let's do this. We saw 3 straight days of positives in the stock market, something that hasn't been the norm here recently. People are really excited. They're thinking that the stock market is on the rebound. And to be honest with you, I have no clue. That's just the facts, because we really don't know where the bottom of the stock market is. At some point, we will hit a bottom and then we will start to come back up. But during that time, there's still going to be volatility. There's always ups and downs in the stock market on a daily basis. So instead of worrying about, are we down in the market at the bottom and we're starting to rebound, you should be asking yourself, what should you do? That's the question to ask, because whether we're at the bottom or we're not, either way, we're in a down market and it is great opportunity. This is great buying opportunity. So what I would tell you to do is quit timing the market. Quit trying to look and say, well, is today the bottom or is tomorrow the bottom? Oh, are we starting to rebound? Should I jump back in? You should have never jumped out, and instead you should have some cash set aside to start investing. Keep investing. If you are putting money in every single month, maybe you want to think about putting a little extra right now while the market is down and take advantage of these opportunities. Now, just to give you an idea of what I'm talking about with the bottom of the stock market and where that is, let's go all the way back to 2008 and look at this chart of the S&P 500. If we're looking here at 2009, that is on the bottom where the dates are shown, it shows you the bottom of the market. It looks like a big V. Well, in that area, that is the actual bottom. But before the bottom and after the bottom of the market, when we were in different areas, you see a lot of ups and downs. That's volatility that is in the stock market, but we don't know exactly which one is going to continue down and which one is going to continue up. That's the challenge with this, and that's why I'm telling you, do not try to time the market. We don't know which one is the actual bottom when we see this, because we can't predict the future. The stock market itself is driven by consumers and their emotions. It gets dangerous to try to get emotional when it comes to the stock market, and that's why often financial advisors are hired, because it's allowing you to pull your emotions out and allow them to manage the money properly. So don't try to jump in and out. Don't try to time the market. That's the biggest thing you can do. Now, another thing that I mentioned was cash. It's great for you right now to have excess cash and put that into the stock market, but please do not use your emergency reserve. Don't use money that you need within the next 3 to 5 years. Here's the reality of it. As I showed you with the 2008 stock market chart, we didn't know where the bottom was, we don't know where the top is. If you were to invest today and it continues to go down, you don't want to need that money, because if you do, then when the stock market continues to go down, you're going to have even more of a loss. So be very careful with this. Don't put money you need in the market unless it's money that you need in 3 to 5 years at least. So just remember that when you're looking at investing this cash. As an added bonus, I want to talk about where I feel the market is going. This is total opinion. I have no clue. I don't have the crystal ball. But like I talked about earlier in the video, I said I really don't know where the market is going, and I still don't know where the market is going. But what I'm looking at is we have seen 3 total days of positive returns in a row. This was all around the government stimulus. Now today, as I'm filming this, the market is retracted just a little bit, but are we still on the rebound? Who knows? I think that personally, we may still have a little bit of a rough patch here. Why? Because the GDP numbers have not come out, corporate earnings numbers have not come out. We actually haven't seen how devastating this has been on businesses. Until we know that, we really don't know if the stock market is priced correctly for the company and its value, or if not. This is a real weird dynamic that we're in right now, because as soon as businesses open again, we're able to go out to eat, we're able to travel and do all of these things, the economy could just jump right back to where it was. It may take a little bit of time to get there totally, but we don't know, and we also don't know what the US government's going to do. They're saying that, hey, we're going to keep things closed for a period of time, but this conversation continues every single day. Every day is, well, what's next for the US economy? What's next for the US government? What are they going to be deciding on us to do? So just remember, don't try to time the markets. It may go down more, and if it does, don't pull out and try to sell off and take a loss there. Be very careful with this. Make sure that you're investing for the long term with everything that you're doing. Also, make sure you're not putting in cash that you need tomorrow. That is one of the biggest things right there, because if you put in cash that you need tomorrow, it could definitely hurt you if the market goes down. So be careful, be safe. As always, thank you so much for watching.